Hey everybody, this is Brett Bonecutter with American Capital. I'm one of the branch managers here in Aliso Viejo, and I just wanted to give you a quick understanding of what's going on in the market. Frankly, rates have gotten beat up pretty bad here over the past week and a half. If you look at this bond chart, and I think you hear us if you're on our blog a little bit or look at our fan book page or Facebook page rather, we talk about this a lot, but the bottom line is if you look at mortgage-backed securities or the bonds by which rates are derived, as these lines go up, it means rates are going down because bond price and yield move inversely. So as these are going down, that means rates are going up. And what you can see is that we've seen, rates more or less steadily decreasing and decreasing through, from late May through the end of July. And then in the past week and a half or so, it's gotten bad. Now, don't get me wrong, rates are excellent still. They're really, really good, but they're not as good as they were. And I think that one of the lessons here is that when things are good and when you think that you've got a result that's going to save you money, you want to really think hard about locking instead of floating. Oftentimes, even if you were to get another 0.125 or 0.25 lower in rate, it's only going to save you maybe $25, $30, $40 a month. Whereas if you continue to wait, you could see the rate that you're trying to get changed by 0.5, which means you're going to save even less than you were hoping, maybe even $100 in this case. So the bottom line is, in my opinion, just my opinion, I tend to think it's going to come back. I don't know if it's going to come back all the way to where it was or if it will get better. But when it does, I really encourage you to not continue to risk floating because the reward or the gain for doing that, I think in most cases is relatively small. So stay in touch with your loan officer. Give us a call if you have any questions. But this is kind of what the market's doing. Again, it's still a good time to lock. It's still a good time to do your loan. But if you're one of these people that keeps waiting for it to get better and better and better and better, this chart is a good, I think, lesson in terms of, don't get too greedy. Take some off the table. If it does get way, way better in the future, you can always take another crack at a refi later if you need to. So anyway, that's the update. Hope to hear from you. Hope you're well, and take care.